So, the markets, after the initial fall in September, October, we've seen a great November. So, when we do shorting, it's not necessarily that we're looking to make money from shorts. It's also going to be a hedge against our long side of the portfolio. So there's no real big, sector out there at the moment which, we're so negative on that it has to be shorted. So it's really to some of the individual names. If markets are moving up, we can use Nifty as well. So it doesn't necessarily have to be individual sectors or companies to be able to hedge the portfolio. Volatility plays its part, but obviously when you have extreme volatility where there's a lot of moving parts in terms of let's just take where we are today. You've had up until a few days ago, you had the Fed decision, or the Fed chairman speaking. You got this weekend we got China and Trump. After that we had OPEC, and then we got Brexit, and we got our own election. So there's a lot of moving parts there in terms of which could take the markets up or down. So that kind of volatility, is not helpful. If it's volatility which is normal rising or falling markets, that's fine. So I think we'll see what happens in the state elections for the general elections, but typically it's a 1 or 2 day kind of sentiment impact for the state elections, and it's too early to say. Let's say the elections are in May of next year. 6 months is a long time in politics, so I think we'll take a view closer to the time actually. Not as though we haven't been long on a lot of the banks throughout the year, but what we're thinking there is that the pain is over for a lot of the the non-performing loans. We think we're coming towards the end there, and the recent events with liquidity in NBFCs and housing finance companies is starting to ease. So what happens is that if the dollar is weakening, which it has been doing, you will get flows to emerging markets. That will obviously bring more liquidity in, push yields down, and that's good for banks. So it's a very simple way of thinking about why we're more bullish on banks in the very short term.